How's it going, everyone? Matt Leighton. Welcome back to another real estate video. Hey guys, in today's video, it's all about first-time home buyers and getting you the best loan program, the best mortgage for your purchase of your brand new first home ever. I'm lucky to be joined with mortgage and loan expert Sean Glennon from Home Savings and Trust Mortgage. Sean, how you doing today?
Doing great, man. I appreciate you having me on. Like I said, let me ride your coattails into stardom here.
Yeah, this guy, he does amazing work out of Fairfax, Virginia. So let's dive right into today's content about first-time home buyer mortgage programs, because when I'm working with first-time home buyers, they're always trying to figure out what down payment, what programs are currently offered. So why don't we just touch a little bit about the best programs out there for first-time home buyers in 2019?
Well, if I'm a first-time home buyer, I'm probably first trying to sort myself into one of three categories that would kind of say that most first-time home buyers fall into. Okay. And I would say there's probably a loan program to go along with each of them. I like the first one, we'll go with the cash-strapped first-time home buyers.
Yeah.
We were both there, right?
Yeah.
You want to buy a house, you're fresh out of college, but you're not making a ton of money. You got student loans to pay off, and you just haven't been able to save up that nugget. Well, luckily, there are a couple 100% financing options out there for you. We're in Virginia, right? I'm sure not everyone here is going to be buying, or everyone paying attention right now is not going to be buying in the Virginia market. But we have a program called VHDA, Virginia Housing Development Authority, that offers a first-time home buyer program that allows for 100% financing, actually up to 101.5%. You can get basically half of your closing costs paid.
Closing costs paid.
Absolutely,
okay.
absolutely. Okay. And then you're going to negotiate the rest of the closing costs, and you're going to be coming to the table with nothing. I would imagine, I know I'm familiar with the DC and Maryland areas as well. They both have kind of like a VHDA equivalent. I would imagine that probably almost every state or jurisdiction has something along those lines that's going to help.
So even if you're not in the DC metropolitan area, there's most likely a program out there that's 100% down or something very close to that.
I'd be shocked if there wasn't.
So income limits, are there income limits on that? Property limits on that in terms of price, something along those lines?
There are, but it kind of goes hand in hand that if you're searching for a program like VHDA, that the income limits, the sales price limits probably won't apply to you. They're pretty generous. In this area, you can go up to a $500,000 sales price. I believe you right now it's $130,000 in income. If you're making much more than that, if you're looking at purchasing over $500,000, you probably have enough money saved up that you don't necessarily need the 100% financing. So that brings me into category number 2. I've got a little cash. I can put a down payment, but my credit's not great. My debt to income ratios are really stressed out. I might need a cosigner to help me, a parent, a sibling, a girlfriend, boyfriend. That would probably be FHA. Is probably the category.
Can I jump in real quick?
Sure.
You mentioned credit score and debt to income ratio. Just in a general scheme, what credit score do I need and what debt to income ratio do I? We don't need to spend a lot of time on it, but just touch on those two things briefly.
Typically, most banks overlays right now are at about 620.
620
FICO score for FHA. Make sure you're getting that credit score directly from a bank if you're evaluating your situation. A lot of the stuff online, the free credit pulls, aren't always super accurate. Don't want to say they're a complete sham, but they're just not always super accurate. Debt to income ratio, that's the driver of how much am I going to get qualified for. My monthly income versus my monthly debt, and added to that debt is the proposed mortgage payment. If that's stressed out, if that's getting high, getting outside your capabilities for purchasing a home, FHA is going to let you go higher than any other loan program.
Okay. So FHA and what down payment are we talking for FHA?
3.5% is the required amount for FHA, 3.5%.
Okay, so it's kind of like that middle ground between 0% down and, I don't know, 20%. Well, not really a middle ground, yeah.
You didn't major in math, I guess.
No, I did not.
So FHA is great for that. And then I want to touch on one other point, which is a cosigner. Because I think that's really important with VHDA and with some of these other programs that I might mention. Your cosigners, who it can be is limited. If they're living in the property, if they're occupying or a non-occupying cosigner matters. FHA, it's kind of all good across the board. If you have someone willing to co-sign the note with you, their full credit situation, income, assets, everything are going to be included in the equation. So if that's you, or you feel like that might be you, FHA might be a very good option.
Yeah, a lot of people think co-signers just for leases, just for rentals. Well, you also have that opportunity when purchasing a property, when purchasing your first home. So 0% down, 3.5% down. What would be another, maybe your third category?
So my third category is the person who's got a little cash. We went over no cash, went over little cash, but I've got some other little nuances, problems. Everything isn't crystal clear. I'd go with the third category. I've got a little cash, and actually my situation's not so bad. I got pretty good credit. I don't need a co-signer. My debt to income ratios, what I'm looking for are within my tolerance, what I've been pre-approved for on my own. Conventional loans came out with a specific loan program that I think was really meant to combat FHA, and to be honest, I've done it significantly less FHA over the last couple of years because of Fannie Mae's HomeReady program. Freddie Mac has the Home Possible program. Basically what they are is 3% down. Conventional programs. Typically 5 was the required minimum for conventional loans. 3% down loan programs that don't have to be a first-time home buyer, but it follows similar guidelines to that income limit, sales price limit that we talked about earlier. So it means that most of the time, not all the time, first-time home buyers just fall into that category. But you're going to be able to get a conventional loan. So you're going to get access to probably what's bang for your buck, the most attractive loan program. PMI is much more affordable. You can get rid of the PMI eventually, whereas FHA and VHDA, you can't. You're stuck with it. So there's definitely some attractions to the conventional loan program that FHA and your state's first-time homebuyer program probably wouldn't have. But you need to be a little bit more of the, I don't want to be politically incorrect, but a well-qualified buyer to fall into that category.
Sure. So, you can certainly do the 0% down. PMI is going to be there. If you have a little more FHA, but it sounds like a lot of your clients that could be doing FHA have actually gone the conventional 5% down just because it's a better program out there.
Yeah, the HomeReady and the Home Possible have eaten up so much of the FHA market. Really, the only reason that maybe lean FHA over that loan program is my credit's not great. I need a co-signer. Or it could be that your debt to income ratios to get what you're qualified for. Like I might say, you might have a client that's looking for that $300,000 condo, and I say, with FHA we can make that work. With the conventional program, we'd only get them qualified for $250.
Understood.
Something like
Understood.
That.
So it really comes down to your exact position, your credit score, your debt to income.
It's not one size fits all, that's for sure.
Not one size fits all.
But I think that if you think of yourself in one of those three categories, there's a good chance that you fall under those parameters.
And Sean mentioned a few programs. HomeReady, what was the other one you mentioned?
HomeReady and Home Possible
Possible.
They're basically the same thing.
I'm gonna list and link those in the description below. So if you're wondering, what are the details of that? I'll have a few links down there so you can go and check those out. I think we did a really good job. Thank you of covering the basics of first-time homebuyer mortgage programs out there. What I'll also do is put your information below. So if you have a question or you want to reach out, definitely reach out to Sean or myself directly via email, or just drop us a comment in the description below. For Sean and for myself, thank you so much for watching. Until next time, create a productive day. Take care.